Let's give you the markets update now. And banking, including financial sector stocks, have had a disappointing start to the year after a strong showing in December with very little local market movement. Company news, investors have focused on global interest rates trajectory and geopolitical tension in the Middle East. Well, let's speak now to independent markets analyst Carmen Mpelwane, and that is why she sort of was shocked as I introduced her. It is an apology from our side, Carmen. You are an independent markets analyst. Let's begin the conversation with your quick overview of how the markets are faring in early trade.
Yeah, thanks, Tony. I think, as you've mentioned, there hasn't been a lot of news flow at present locally, and that gives us more cause for trying to dig into why the market has been down so much in January. As you have mentioned, there is a significant overhang of geopolitical tensions in the Middle East, and that is weighed significantly. Yesterday, we did see that the banking sector pulled DJC down significantly, going into towards the close yesterday. We also see that there is Martin Luther King Day internationally, so that also had an impact on the global market side specifically. I think today we're going to see lots of news flow. So expect to see some volatility. That on the back of the US coming out with its retail numbers, China coming out with its fourth quarter growth numbers. We are coming out with our retail numbers coming out tomorrow, so we'll see an impact from that. And then also Davos starts as well. So lots of news flow starting to come through and likely to have an impact on the local markets as well.
Carmen, there might be a glitch in your connection, but we'll see how it fares in this second question. Let's try and see if we can sustain the conversation and talk about commodities. Oil prices mixed after losses in the previous session. What's driving those market moves?
I think, again, one of the key things there is on the geopolitical side. We are seeing a lot of news flow out of the US in terms of their political arena. We're seeing commentary coming out of the Fed as well, which remains quite cautious. So those various new flows globally definitely are having an impact on both the oil price and global markets.
Let's then talk Statistics South Africa, which is expected to publish retail sales on Wednesday. What can we expect from that data?
So I think to start, you'll keep in mind that these are the November numbers for 2023. So these will capture the Black Friday trends. I think there's been a lot of hope around the focus that there were deep discounts largely across Black Friday. I'm sorry, not as the same as we've seen previously. So lots of caution going into these retail numbers. Also, you'll remember that the November CPI came in at a more palatable level. That may have an impact on what is going to come through on the retail numbers tomorrow. This will be on the back of the October 2023 retail numbers where we saw a significant decline. And that may have been the consumer who pulled back in the hope that they'd get specific discounts over November. But again, we never know, and we know that Black Friday has disappointed over the last 2 to 3 years. So I wouldn't bet my money on there being a significant increase.
We'll keep that in mind, Carmen. Let's talk company news. Northern Platinum posting a voluntary production update. Anything that stood out for you there?
I think very, very strong indication or excuse me, a guidance from Northern Platinum. We did see a 10.6% increase year on year for them for the first half to end of December for the refined equivalent PGM for the company specifically, including third-party metals. We did see an increase of 19.9%. I think this will help them significantly in offsetting and alleviating the pressure from the significantly reduced PGM basket price. We saw deflate significantly in 2023. So this will be a benefit for them. keeping in mind that they did walk away from their RB Platts stake last year, and we've only seen them benefit from that with the maiden dividend that they brought through, as well as the share buyback. So I think shareholders will react positively to this and enjoy the news going forward.
Well, let's try and conclude this conversation before the gremlins completely try and run us out. Let's conclude with the trains on South Africa's main coal export line. We saw pictures on social media of that collision this week. In fact, it was yesterday, to be exact, and that's if my memory serves, shutting down the entire route that's been plagued with these issues. Help us make sense of the repercussions there.
So it seems like Transnet just can't catch a break. I think the key thing in this story is relates to the fact that this is on the main coal line and very close to the Richards Bay coal port terminal as well. So that will have ramifications for production or supply, should I say, to the terminal. If you remember, in November 2020, there was also a collision on the main line, and the repercussions thereof was that they were out of commission for 2 weeks before it was brought back on, and that estimation was that there was a loss of about 1 billion rand per day because of that. So significant ramifications for coal supply to the RB coal terminal. Transnet has just come off or just managed to get that support from government, but this obviously doesn't go any ways to assist them in terms of improvement and getting back on track.
Carmen Mpelwane, let me thank you very much for that market update. An independent markets analyst, and let's apologize to you for the break in transmission at times. Hopefully you got the gist of that conversation.